Welcome back. I'm still with Mr. Vicky Amarnani from MNC Invest in the Futures here in the last segment talking about currency fluctuation, commodities and the global economic condition. So now continuing about the quantitative easing issue in the US. Yes. So how is it?
Well, market's already priced in QE3. That's why we can see the rally in gold above the 1,600 mark. But if you ask me, will there be any QE3 now? We just had the Fed meeting, and basically Ben Bernanke mentioned that they will accommodate. They're not providing any easing as of now, but if required, they will provide it. So more of that kind of an approach. But with the elections coming up in November, I don't see an easing this year. We may see some easing early first quarter next year.
Now talking about the stock, maybe that McDonald's, Facebook, Apple, how is it? You can share about this.
I think, a lot of people think that the equity market's very risky and dangerous at this point. But what is important is that you invest into blue chip, strong growth companies with good dividends, and you'll be good to go. Because interest rates are low, all investors, everybody in the US basically are investing into blue chip companies. The way they believe is, if I buy Microsoft today, I get a dividend of 2.5%, 2.75%, that range, compared to getting an interest rate of 0.25. I know 10 years down the line, this stock will be higher, even though it moves up and down now. And I'm getting a higher dividend of 2.5% a year. So it's much higher interest. And therefore, US blue chip stocks, whenever there's a correction, the strong blue chip stocks fall down only by a bit and they rally up stronger. So you buy names such as McDonald's, Apple, Caterpillar, Microsoft. An interesting one I want to share is Facebook. The IPO was issued at 38 and now the shares are down over 50% at 18.5 because there was too much optimism priced into the IPO. Basically. But at this point, $18.50, I see a lot of potential in the stock. There's earnings at 7.5 times of PE, of price earnings, which is very, very cheap. So investors who have a bit of risk appetite, I would start accumulating some shares in Facebook as well.
You mentioned about the interest rate. So what are the implications on the low interest rate in investing now, maybe especially in Indonesia?
Well, first thing for the bond market, the yields that investors will get on the purchases of bonds will be very low because interest rates are low. Because everything is compared on top of treasuries, especially for the US dollar. I'm talking more on the US dollars. And with the low interest rate, stock markets I see continuing to rise. But of course, there's no more that buy and hold approach. We have to be more of traders than investors, especially after 2008, because the trend can be up for 2-3 weeks, the next week can be down again. So you buy, you have a target, you have a cut loss, you get it, you come out, you trade in and out all the time. That's the way to approach.
Now back again to the commodities, which one is the best to be chosen by our investors in Indonesia, maybe your customers in MNC also?
Our gold has been a favorite for our clients. So for more of buy and hold investors, I would say buy on corrections like 1,650.
1,650 now.
But for traders, there are a couple of strategies we use, such as double top, double bottom strategies, news trading or non-farm payroll, and other strategies where they can look to day trade and look for quick profits in and out. And another interesting one is oil. Oil has been trading between the range of $94 to $98, and now it's about $95.50. And with the global economy slowing down, not only from the European nations and the US nations, but even Brazil, India are showing slower growth in GDP. Whereas oil price has continuously been rising. So does it make sense? Because oil is an importance to the economy. If the oil price goes up too high, there's no growth. We may face stagflation. High inflation, no growth, which is a problem. So I see oil going down south. I know the problem with the Iran sanctions from the US is creating concerns as well. But I think that's temporary, and we're going to see oil go back down to $85. So for me, $96, $97 is a good sell, and I do not see oil spiking above $100 anytime soon.
Another backup maybe in the commodities after gold and oil?
Well, besides gold and oil, those are my two favorites. Silver tends to move, but the pattern tends to be erratic, not following all the time. It was cheap, but now it's gone up to 31. So it's those are my two favorites. Coal, I would be a little cautious because of China. There's been slowing down. Coal prices have been falling. Metal prices have been falling. So I would suggest investors to stay out from there.
Talking about the China and Japan faring, are the numbers encouraging outlook towards Nikkei and Hang Seng? How is it?
Well, see, China GDP is slowing down to 7.6% from double-digit figures. Japan has always been in a problem, in a recession for the last 10 years. I mean, their growth is like about 1.2% per year. So with that, we know the earnings of the companies may not be all that strong. Well, let's just talk about Nikkei first. For Nikkei, I still believe Nikkei under 8,800 is a good buy. but I would see a cap at about 9,100 with Nikkei. So I see Nikkei trading within the range of about 8,200 to 9,100. So the way I mentioned that it's now a trader's approach. So you buy and sell. If it's towards the higher side, you know, depending on the market fundamentals, you could look to sell, and on the lower range, you can look to buy. And for very long-term investors, I suggest buying on these indices because with these indices, it's a group of stock. Let's say, for example, Dow Jones, 30 stocks in the Dow Jones. If one stock performs really badly and there's a stronger stock, they will take out the weaker stock and put a stronger stock. So that will sort of support the stock indices in the long run.
So now how is the investors doing in the market? I mean, the enthusiasm according to this uncertainty, high uncertainty in Indonesia's conditions.
From which sector are you?
Maybe the commodities. I mean, they want to invest in which one?
Yeah, commodities. I mean, as I said, besides gold and oil, there's been poor performance on other commodities. Sorry, just to confirm on just to refer on the Hang Seng we had mentioned about earlier. On the Hang Seng, below 20,000, like as it's trading now about 19,400, it is cheap according to me because China has more room to reduce the reserve requirement ratio. They can do more easing. And China is it's still a big economy, so there's a lot of room for growth as well. And I still believe the Hang Seng is going to go back above the 20,000 mark with a cap at of about 20,500. Yeah.
Kindly give your short prediction towards all this issue.
Okay, my view towards the end of the year is that we're going to see more dollar weakness, more risk appetite in the market. So we're going to see a bit of more stronger rally in the markets. But again, my suggestion is not to buy on the high side. You buy on corrections. In terms of the currencies, euro will be ranging between 1.22 to 1.29. Aussie, you buy below parity. Keep some US dollars and keep some gold for some safe haven exposure as well in your portfolio. And buy some blue chip stocks with good dividends. They will be very rewarding in the future. Yeah.
Okay, thank you, Mr. Vicky Amarnani, for coming to the studio talking about currency fluctuation.
Thank you, my pleasure.
Thank you so much. There was Mr. Vicky Amarnani from MNC Invest in the Futures talking about currency fluctuation, commodities price, and global economic condition. And up next, you have some more updated news and business information, say with Revenues International. Thank you so much.